Good afternoon and thanks for joining us, and a very happy International Women's Day from all of us at Kalkine TV. I'm Holly Shields and you're watching The Last Show of the Day at The Last Trade. Now, first of all, a look at the markets. The ASX 200 opened 0.1% high today in a muted gain led by healthcare stocks. Investors keenly eyed updates on the economic front as NAB's latest monthly business survey revealed that business conditions and confidence improved during February. Meanwhile, retail price inflation surged 2.1% in quarterly terms last month amidst supply-side disruptions. And while Omicron fears seem to be subsiding after creating a major uncertainty, there are still uncertainties due to the Russia-Ukraine war, as the impact of which remains unknown. But coming back to the local bourse's performance today, the ASX 200 closed lower, dropping 58.30 points, or 0.83%. Over the last 5 days, the index has lost 1.64% and sits 4.99% above its 52-week low. Then on the sectoral front today, 6 of 11 sectors were lower, with healthcare as the best performer, getting 1.83% and rebounding from its recent decline. Although the sector is off 3.04% over the past 5 days. But now let's have a look at the top gainers and losers of the day, starting with St. Barbara, which is up a whopping 11%. The company was followed by Mesoblast and Woolworths as well. Other top performers include Imugene and CSL. But then on the other side, in the red zone of the ASX 200, Nickel Mines was the top laggard, its stock down over 8%. Following nickel includes BlueScope Steel, Liontown Resources, South32 and Oz Minerals, all in the red zone. But now look at a few stocks that interested investors today, starting with Alliance Aviation, which announced a further material increase in the E190 flying activities pursuant to the wet lease agreement with Qantas Airways. For the unfamiliar, a wet lease is where the provider supplies a full service including crew and maintenance for the plane. And Qantas has a deal to wet lease up to 18 aircrafts from Alliance Aviation, which believes the new leases commence between March and July 1st, and for a period of 3 years. So today, Alliance Aviation and Qantas both traded in the red zone. And in other news, power giant AGL seems to be facing significant investor doubts about its proposed demerger, and it's being urged to re-engage with tech billionaire Mike Cannon-Brookes and Canada's Brookfield, after rejecting their multi-billion-dollar takeover bid. Grok Ventures and Brookfield lobbied for a revised takeover bid for AGL over the weekend, raising their initial offer by 10% to $8.25 a share. However, the board declared that the offer was still not high enough and decided to knock it back yesterday. And then in other news, all three of Australia's global iron ore giants fell today, with Rio Tinto shares, BHP and Fortescue Metals dropping over 3% each. The metals sector overtook energy as the day's top laggard, weighing in on the blue chip index. And now for a look to the global markets, which have been rocked by a sharp increase in crude oil prices as investors fear more penalties against Russia. What's more, there is no sign that the two countries' hostilities are diminishing. And to Asia now, where the Asian stock markets were trading a mix today as the Ukraine war continues to keep investors on edge. Japan's Nikkei slipped 0.14%, while the Topix index shed 0.41%, and South Korea's Kospi dipped 0.33% as well. Meanwhile, the Indian equity market also declined for the fourth straight week as ongoing concerns on the Russia-Ukraine conflict, coupled with soaring crude oil prices, continue to weigh on market sentiment. Then in the US, overnight, stocks fell sharply on Wall Street after another big leap for oil prices threatened to squeeze inflation's grip on the global economy. The S&P 500 fell 3%, its biggest drop in 16 months. Then the Dow Jones fell as well, 2.4%, and the Nasdaq shed 3.6%. And that is a wrap for now on The Last Trade, but tune in next time for more market commentary. I'm Holly Shields, signing off.